Hi everybody, this is Yohay Elam of Forex Crunch, doing the second morning show for FX Street. How's everybody doing? Hope you're doing well. We just began the show and we have live chat rooms, so we're going to talk about markets, but your participation is of course very important. Let's first of all take a quick look at the charts and see what's going on. Let me share my screen. And let's see what's going on with the euro dollar, of course. It's always the most important currency, isn't it? So we have euro dollar trading in a well-defined range. It's between 111 more or less and 111.50. We're trading now a bit lower within the range at 111.20. Outside this range, I see support at 110.80 and of course 110, but we need a big push to push the pair lower, of course. And on the top side, it's 112, 112.15 as the next resistance line. So this is what we're looking at the chart. Moving on to pound dollar. Also here, the pound is a bit down, so to speak. Selling Britain by the pound. We're at lower levels. This is an hourly chart. Currently at 153.40, and we had a swing low of just under 153 beforehand. I would call that break under the round number of 153 as false, but it's still to be seen what developments we'll have today. 153.60 is the resistance, and then followed by 154, the immediate levels. Moving on to dollar yen, it's a bit more choppy, as we mentioned yesterday. If you guys have been on the show yesterday, we had dollar yen is hugging the 120 level. At the moment now it's above this level, but it's really all around it, hugging it. So a bit more to the upside, we have 120.50, and to the downside, 119.40. Dollar yen is mostly influenced by US figures. Moving on to dollar CAD, we have Canadian retail sales later on. We'll talk about that a bit more in detail later. Anyway, dollar CAD is also, we're seeing this trend of a stronger US dollar. We see that also against the loonie. It's 132.75. The very round number of 133 is, of course, hanging above, and 132.20 is support. Australian dollar was hit hard in the night. Night for us here in Europe, morning in Asia. It's currently at 70.40 after reaching 70.20 earlier today. Resistance waits at 70.60, followed by 71. Under 70, we have 69.80, but I think we'll need a bigger push to find the pair trading lower. The Kiwi, I don't know how many of you are trading it, but it's been very trendy lately, trending down. It's 62.63 at the moment. 63.10 is resistance, and support is just at 62.50. Dollar Swiss, I must say I don't like this pair. Maybe you know why. Well, the Swiss National Bank continues intervening. So anyway, we're at 97.65, moving back up, recovering from the Fed shock. 98 is the level I see as resistance, and support is at 96.60. Let's move on to some crosses. Staying with the Swiss franc, Euro Swiss, the pair that the SNB defended for so long. Now it's 108.64 with 108.20 as support and 109 as resistance. More interestingly for me, Euro Pound, interesting also for people coming to visit the city. I live in Barcelona from the UK. It's currently at 72.50, which is just above support at 72.40. There's a long way up until resistance at 73.60, and support is at 72, the round number. The pair traded earlier in the year under 70 cents, but recovered. Euro Pound, Euro Yen, 133.70. I see support at 130. 320 and resistance at 134. And the dragon, we'll finish off with this pair. Pound yen, it's at 184.40. I know many traders like this pair because it provides lots of pips. Support is at 183.50 and resistance at 186. So this is the initial market lookout. Let's see what we have today on the agenda. See if we have any questions. Of course, questions are welcome. I see Michael. Good morning, Michael. You want to share a chart? And I see Mauricio is helping you out with that. In general, I have things prepared for you guys, but we put a big emphasis on having the community involved here, and can interrupt with questions at any given time. So looking at, prepared a few comments for you guys. We've already had a look at the charts. Let's see this loading. Okay. So basically, we had last night another speech by Dennis Lockhart. He's a member of the Fed. On the Dove Hawk scale, Lockhart is a centrist. That means he votes closely with Janet Yellen, and his words have a bigger impact. If he's more hawkish, then it's good for the dollar. If he's more dovish, it's bad for the dollar. Some members have less influence because they have a very known position. Some are hawks like Bullard or bullish Bullard. If he supports a rate hike, it's no news. And we have members like Evans or Kocher Lakota, which are very dovish. So if they are against the hike, it's no news either. But Lockhart, because he's in the middle, he has a lot of influence. So he repeated most of his speech from the previous day. Basically still sees a rate hike in 2015, and that of course helped the US dollar. Okay, another big development we had during the night, let's put the calendar on for you, is the release of the Kashin manufacturing PMI. I hope I'm saying that correctly. Anyway, it's an independent figure from China, not a government figure. And it's a survey of purchasing managers about their expectations for the future. So it's important because it's independent, and it's important because it looks to the future. And as we can see here on the calendar, we had a small miss. I mean, if you look at absolute numbers, it's not such a big deal, right? I mean, we expected 47.5, and the actual number was 47. But the bigger picture is it's another deterioration. Any figure under 50 points means contraction instead of growth. Manufacturing is critical for China. They've been the sort of factory of the world. And it's the lowest in 78 months, the lowest since March of 2009. Okay, so this was another disappointment, and we already had in August this Chinese tantrum, Chinese crisis. So this is bad news. This, of course, explains what we've seen earlier on the Australian dollar. Australia sells commodities to China. If we focus on the chart, you see this big drop here from 70.80 to 70.30. That's the immediate reaction to the news from China. So that's been the big news from tonight. Another important figure that was released, figures that were released earlier just before the show. We had the same PMIs, but for France, Germany, and the Eurozone. Let's go back to the calendar. The bigger news here was actually positive for a change from France. France is the Eurozone's second largest economy. And finally, we had the manufacturing sector, which is slightly more important than services, finally get back to growth territory above 50 points. So expectations stood on 48.5, and the actual figure was 50.4. That was good news. That sort of helped the euro stabilize in range, at least for a while. In Germany, we had disappointing figures, as you can see. manufacturing came out at 52.5 instead of 52.8, but it's not such a big miss. I think the news from France is more significant. All these figures for the Eurozone and for China are preliminary figures for September, and we'll have final figures early in October. Let's see what else we had. I don't know how many of you have heard about what's going on in Volkswagen. I mean, I'm sure everybody knows this famous German car manufacturer. Well, they're good at engineering, and they engineered also the systems that create emissions, pollution. Basically, they made software to cheat the system, cheat tests. And why am I talking about this? We're talking here about Forex, because this has a bigger impact on wider markets. It's a very big car manufacturer in Germany and Europe. There's some fear that not only the CEO is going to pay the price, he's still in power, but that maybe the company could even go down. I'm not sure that will happen, but the bigger fear is that it'll have impact on other car manufacturers. Autos are, of course, a very important industry all over the world, and that's sort of another doom and gloom over markets, and that's why we see the dollar and the yen gain more ground. So even if you're not interested in cars or read this news only, if you have read this news only as an anecdote, only not anything Forex related, I think we should pay more attention to this. So it also is one of the big themes now impacting markets. Okay, looking at euro dollar. Well, it's not. I think it's not the main reason for the fall. We're already 340 pips below the post-Fed high, but it's sort of another weight on its shoulders. Okay. Let's see what we have later on the agenda today, and of course we welcome your questions. So for those of you trading the loonie, we have retail sales in Canada at 12:30 GMT. That's 1:30 in London and 8:30 in the United States, in New York. So let's see what we are expecting now from Canada. Well, these on month over month in August, we're expecting headline retail sales to continue rising 0.5%, and after 0.6 beforehand, and retail sales ex autos 0.4 instead of 0.8. Okay, this is an important figure for those. It has a limited impact outside Canada, but of course for those trading the loonie, it's important. We recently learned that Canada is in a technical recession. In the first and second quarters, the economy contracted. So this is another test to see how strong the economy is doing. Of course, it has been hurt by oil. And the big question is the wider economy strong enough to weather this storm? I think that if we'll have a small disappointment, we could see dollar CAD break above 133. The Canadian dollar looks weak. The markets like to sell the loonie. I think we've mentioned this in the last show yesterday, that when oil falls, the loonie falls. When oil climbs, the loonie doesn't really climb. So there is some kind of tendency to sell the Canadian dollar. Of course, if the figure is good, we could have a CAD rising. That means dollar CAD moving lower. And next event is, I think, the main event of the day. They called it the Draghi show. Mario Draghi, the president of the European Central Bank, testifies in front in Brussels, if I'm not mistaken, in front of Parliament. And this is a great opportunity for him in his prepared statement and also in the Q&A to talk about monetary policy, to talk about the euro, to respond to the move that the Fed did. So this is a huge event. Recent figures from the Eurozone, well, we've seen PMIs. Let's go back to the calendar. PMIs were okay. They still point to the same kind of fragile recovery as we've seen so far. But if we look at GDP, it fell a bit below expectations. Inflation came out just below expectations. I'm talking not only about headline CPI, but also core inflation. So the big question is, of course, more QE and until when? So the ECB has a bond buying program of 60 billion euros per month. This is expected to end in September 2016. The program was launched back in March, so it's a program for a year and a half. In theory, it's worth 1.14 trillion euros, but it can always rise a bit more. And there are two questions here. Will they only extend it beyond 2016? And will they increase the monthly buys? So extending it beyond 2016 is sort of a promise for the future. It does have an impact, but I believe it's already a bit priced in. So I think if he talks about extending it now, or announcing or considering it in the October meeting or the December meeting, it'll have some kind of negative impact on the euro, but nothing really earth-shattering. It's sort of mostly expected. But if he hints that they're considering to enlarge the monthly buys, that means more immediate action from 60 billion, let's say, to 80 or to 100 billion euros per month. That will have a much deeper impact on the euro. So, for instance, I think we mentioned this yesterday, Goldman Sachs talked about euro-dollar falling between 6 to 10 big figures. That's, well, that's quite a lot. That's 600 to 1,000 pips. And they still have a target of 95 cents. That means a fall of about 16 big figures from now. So a lot depends on what the ECB does. It's sort of a currency war between central banks. And Draghi will have, of course, a big impact. Let's see. Let's go back to the screen. Had this error. I hope you're all with me once again. Let's see. Browser decided to say goodbye. But we're back online. I was talking about, I hope you can hear me. We were talking about the Draghi show. Yeah, so let me try to share the screen once again. Big event of the day is at 1 p.m. GMT, the ECB president speaking in front of the European Parliament. And let's share the screen again. All right, we're back in business. So we have the third event of the day that I'm highlighting is at 4:30 GMT, and yet another speech from Dennis Lockhart. If he repeats once again, talk about raising rates in 2015, it can have another small boost for the US dollar, but it's basically going to be his third speech, so it could have a smaller impact. We have more events on the agenda, which are, I think, less important. We have at 1:45 GMT, we have markets manufacturing PMI for the United States. So we heard the news about China, France, Germany, and the Eurozone. Now we'll have the same figure for the United States. It's expected to remain at 53 points. It's important to remember that in in the United States, the ISM manufacturing PMI carries much more weight than markets PMI, but it still has a small impact. For those of you trading the Canadian dollar, the main event of the day is the release of the Canadian retail sales, but also the release of crude inventories has an impact. We talked about Lockhart. For those of you trading the New Zealand dollar, we have the trade balance, and it's I think also this is especially relevant for China. But when we have trade balance, it's not. We can look at the headline figure, but it's also very important to look at imports and exports. If they're both on the rise, it's good for the economy. It means more activity, and if they're on the fall, it means less activity. Anyway, we're expecting a negative trade balance in New Zealand for yet another time. At least this deficit is expected to narrow from 650 million to 450 million this time. A more significant event, especially for those trading euro-dollar, is tomorrow's, where is that? IFO business climate. Yeah, so at 8 GMT, just as we start, IFO is Germany's #1 think tank. They are expected to show a small decline in business confidence and business climate from 108.3 to 108. It might be even deeper because we've learned last week that another one of their competitors, let's call it this way, Zoo, they released a very disappointing figure. So we might see another disappointment here. But on the other hand, we could see a contradiction between what they expect for the future. And we have the expectations component, which could be much more doom and gloom because of the negative atmosphere now in markets. And between the current assessment, what's going on at the moment in the German economy. So we could see some jumps, falls and jumps on the initial number, but it could be quite different afterwards. So if we have a negative outlook for the future, but a stronger figure for the present, the impact will not necessarily be very negative for euro. Sorry. Okay. So these are the main events we're looking at. For me, again, the main event for today, Canadian retail sales, Draghi's testimony, and mostly tomorrow's German IFO business climate. Okay. Basically, I'm waiting for your questions. And we can talk about the bigger themes in markets. So the biggest theme in the markets is what happened 6 days ago. The Fed decided not to raise the rates. It still has a big impact. They went dovish, they mentioned China, and they triggered, they still said that there's probably going to be a rate hike in 2015, probably December, because there's no rate hike in October. The initial move was a weaker dollar, but since then the dollar is strengthening. So why is that? It's because many think that if the United States is not able to carry the global economy, other central banks are going to see it even worse. And the big expectation is for the ECB's next move. It's all tied together. We had the Chinese figure coming out earlier today. We had, and the ECB's Draghi talking. Okay, we have a question. I see. What's your take on the Aussie dollar? Let's put the chart on, right? So, Aussie against the US dollar, we have it at 70.40. That's sort of around the low end of the range, right? I'm bearish on the Australian dollar. First of all, because of China. Australia is very, very dependent on what's going on in China. So each time we have bad news from China, like today, as you can see this fall here. So it's bad for the Australian dollar. Looking at the Australian economy, it's not doing that bad. And They have an unemployment rate of 6.3%. Other sectors are doing okay, but okay is not enough to grow. There's also a political crisis. They just replaced their government. The previous prime minister lost confidence within his own party and was ousted. So there's also some kind of political turmoil over there. Nothing like in Europe, but it's still just another negative factor. All in all, I think the Australian dollar has more reasons to fall. If we look at commodity prices, at copper, at iron, which is everything is of course related to Chinese demand, we see more falls for the Australian dollar. And I'm quoting commodity prices not only because it's important, but because the Reserve Bank of Australia, the central bank there, Glenn Stevens, is in their statements, they always talk about the exchange rate of the Aussie in relation to commodity prices. So currently they don't see it as overvalued. They're sort of satisfied with the situation, but the more commodity currencies fall, the more value of commodities fall, the more price of iron and copper fall, the more they want to see a weaker Australian dollar. So if it doesn't happen on its own, if the Australian dollar doesn't continue falling alongside commodity prices, the RBA, I believe, will be there to push it down. So we have we had 2 rate cuts in Australia this year. Interest rate currently stands at 2%, and we could see further falls. This is on the fundamental side. Now, looking a bit at the chart, let me move from a 1-hour chart to daily chart. So, well, I think I hope that a bit too many lines on this chart. Let me try to erase a few to make it a bit clearer. But in any case, I think the picture is quite clear on its own, isn't it? Because the trend is clearly down. If we make it even a bigger scope, well, we've seen figures above 90 back in June, and well, this is a downtrend no matter how you look at it in the past few months. Let's focus on recent months. We had since the beginning of the year, here we have 2015, when we did have some kind of recovery. Prices managed to reach above 80, but then we had another fall, another fall. The low so far has been just under 69. We had a recovery. I see it as a necessary correction. But basically we had lower highs. If you can see the chart, so we had around 74.20 as the previous high here in August. You can see the most, I hope. And then we had a recent high, sort of the post-Fed jump at 72.75, and it's a lower high. So as I see it, it's just part of the trend, a correction within the trend, not a change of course. So in my opinion, the tech levels support the fundamental moves, and the trend remains lower for the Australian dollar. And if it doesn't fall too much, I believe the RBA will be there to, first of all, to talk more about the Australian dollar, of the Australian dollar going down, and it's the necessity of seeing a weaker Australian dollar, and later also maybe more rate cuts. Because if the Fed will not do the work for the RBA will have to do its own work. So I hope this answers your question, Brian. I'm glad we welcome questions from everybody, and looking forward to more questions. So while we wait more questions, let's talk a bit more. If we've talked about the Australian dollar, let's move on to the Kiwi. So also here, the trend is quite clear, right? It's all downhill. This wasn't always the same for the Kiwi. It's important to differentiate. Australia exports hard commodities. You're welcome, Brian. Australia exports commodities such as iron and copper, metals for Chinese consumption. And New Zealand exports milk. Well, other stuff as well, but it's something, it's more a necessity. It's food. It's not to build new buildings. It's not material for building factories or buildings. So for quite some time, New Zealand was sort of managed to weather the situation. But then we've seen inflation not rising enough in New Zealand. We've seen GDP not rising enough. And the central bank, after hiking, they actually raised the rates last year. They basically reversed course. They cut rates so far this year 3 times. Another rate cut is expected in October. And also the prices of milk began falling. So in the recent 3 auctions of the global dairy trade, we did see the price of milk rise, but all in all, the bigger trend is lower. And that's why currently we have some kind of consolidation in range. We haven't seen lower lows, but we haven't seen higher highs as well. So it's basically 60 to 60 to 64.50. We have this range. Also in the Kiwi, I think the situation in China, the glut in milk, and the desire of the central bank to see a weaker currency will all push the Kiwi a bit lower. But yet again, New Zealand is less exposed to China than Australia. If we're already in Asia Pacific, let's see, one of the most popular currency pairs, one of the most popular crosses, the dragon Gepi, 184.50 at the moment. The movements here are wider. At the beginning of the show, we showed the the chart on the hourly chart. Now we're looking at the daily chart. So also here we can see really big movements, and we have very nice technical behavior as well. So we have basically the risk on pound against the risk off yen. If you can see, 180 was the low, very round number. That's what I call a nice technical behavior. And on the upside, it wasn't that round. It was 188.25. That was the upside in recent weeks. On the top side, we have another very tough resistance line. We've seen it back in August and also during this month in September. That's 195. As you can see, it's sort of a very stubborn cap. And that's a line to watch. In the middle of this higher range, let me put another line here, sort of a gap line over at 191. Anyway, if you're trading this cross, I suggest trading with care. What's my opinion on gold, Mauricio? Well, I don't follow gold that closely. I can just say so I'm not aware of the everyday movements. What I can say is that gold, luckily maybe or for some, but not for others, it used to move on lots of speculation. So we had it reach $1,900 in 2011 when there was talk about inflation, hyperinflation. All the gold bugs pushed it higher. But now I think it's back to basics. Gold is used for jewels, for industrial use, and we're seeing much lower trading ranges. First of all, they're lower, and movements are more shallow. In general, gold needs more QE in order to go up. Once interest rates all over the world go up, which is not coming very soon, we could see the price of gold tumbling down. I think we're still seeing a big unwinding of the big speculation that we've seen beforehand. I don't have a chart prepared for gold, but we can surely cover some technical levels and recent price developments tomorrow if you wish. But at the moment, I can only offer some general commentary. Okay. Let's go back to euro dollar. Reconnect. I think we're seeing, let's go back to the hourly chart, go back to our day-to-day movements. Well, as I've said beforehand, we're trading at a range between 111 and 111.50. And that's, we're currently at the low end of the range. Anecdotally, 111.11 on euro dollar is exactly 90 cents on dollar euro. Not so meaningful, I guess, for many traders, but I'm following that number as well. And we're currently at this level. We did see the pair rise, as aforementioned, on French data. French data was positive, but the trend remains lower. I think markets are preparing for Draghi. They're waiting for another blow, as we've seen in the past. But this means that if Draghi doesn't deliver something really surprising, then euro dollar could go up, because extending QE, I think, is already priced in. Maybe enlarging QE buys, enlarging bond buys, monthly bond buys is not in. So Draghi will need to be very gloomy, I think, to push euro dollar even lower. If he's just going to repeat whatever he said back in September about the possibility of extending QE or considering more action, something more generic, general, I don't think we're going to see a lot of action. Welcoming your questions, as always. Michael, do you have any question? Brian, is somebody else here? Welcome, KL. Welcome, Zach. Okay. So let's see what else we can talk about. Any other topic on the agenda? Let's say pound dollar. Pounding the pound, selling Britain by the pound. I think I spoke with Dale the other day, Dale Pinker, which has his show later on in the US session, and I said the sell-off in the pound is unjustified, especially when the euro was moving higher. Well, so we had some kind of recovery in the pound. I mean, not just now, but okay, this is a bigger scope. We had a recovery towards the Fed decision on September 17th. And then we had, of course, spike higher because the dollar was selling off. So, so the pound did manage to recover against other currencies. And then, of course, also rode higher against the dollar. What I see now is that the pound fell in a more justifiable level, because also the euro is falling, also commodity currencies are falling. So it's more justified now. The pound is relatively on the more hawkish side, on the more bullish side of currency pairs, because the Bank of England is also expected to raise rates. But it's not Governor Mark Carney who decides first, not his MPC members, not the UK government. I think the biggest influencer on UK rates is still Janet Yellen of the Federal Reserve. So the Bank of England, in my opinion, is waiting for the Fed to move first before they move. Even though there are some good signs in the UK, for instance, wages are going up at the highest rate in a decade, I think, or so, 2.9% year over year in the recent figures. So this is something that is lacking from the US recovery. We have in the United States more jobs gained, but wages hardly rising. So more work, no more pay. In the UK, the situation is a bit better with higher paying salaries, but the interest rate there has been at 0.50 at 0.5% for already 6.5 years, since March 2009. And the next move is going to be raising the rates. But as Morrissey says, how soon is now? Not so soon. First we take the Fed, then we take the Bank of England, if to quote another singer, Leonard Cohen. Anyway, I think we can also see here a nice technical pattern, head and shoulders. So yeah, pound dollar is usually quite a choppy currency pair, has stronger moves than the euro dollar, requires wider stop losses, lower leverage than euro dollar, but at least it has a very nice technical pattern here. We've seen it last week create, I hope you can see the mouse here, this area is the first shoulder. Then we had, after the Fed, the big head, another shoulder here. Well, it's never really perfect. And then you know what happens next, as they say, boom, we had a big fall all the way from the base of the shoulder just under 155 to a low earlier today of, let's see what the number is, 152.97, just around 153. What's the next move from here? Now, we don't have any important UK figures today, but let's see, maybe you have later this week some interesting numbers. It's not, this week doesn't provide a focus on the UK. I'm using the FX Street calendar, by the way, on my site on Forex Crunch. You can also see it. Very useful, lots of information. I'm filtering for the UK to see if we have important events later this week in the UK. What day is today? Thursday. Oh, yeah, tomorrow. Actually, it happens during the show, so it's worth talking about it already now. We have retail sales in the UK. The most important figure, the most impactful figure, is the change in retail sales month over month. We're expecting a 0.2% rise. Oh, sorry, I'm looking at last week. Sorry. Erased the last 30 seconds of what I said. So today is Wednesday. We have a speech from an MPC member called Broadbent. Usually doesn't move markets. And tomorrow we have mortgage approvals. Happens during the show. It's from the British Bankers Association. I don't see it as that important. So basically, the pound, let's go back to the chart, is moving this week mostly according to the international developments. That means the three major centers. Let's go back to the here, which is the echoes from the Fed, the next move from the ECB. A dovish ECB means a weaker euro and maybe a stronger pound, and the situation in China, which in general is negative for the pound. Bad news in China is bad news for the pound. So that's what's going on in markets today. Any other currency pair maybe we can cover now? We talked about dollar yen hugging 120, 120.20. Dollar CAD, high levels. Commodity currencies in general are suffering from what's going on in China, from the weak PMI. And so dollar CAD is near the highs. That means a weak Canadian dollar. Aussie dollar, of course, directly hit, so bounce, falling back to the floor, the 70 floor. And the Kiwi dollar also at the lower levels. We're looking now at a 30-minute chart. And euro dollar is also, euro dollar has changed its behavior. It's been sort of a more safe haven currency or second tier safe haven currency. But now after the Fed, I think dollar is king. Okay. Let's see if we have any more questions for now. Or if we don't have any more questions, maybe talk about something else. Okay, so let's begin to wrap up. You can see the screen. So what we're seeing now is another strengthening of. This comes on the echoes of the Fed meeting last week. More specifically, we had Fed member Dennis Lockhart reiterating that he supports a 2015 rate hike. That's positive for the US dollar. The big development overnight was a weak figure from China, and we had manufacturing PMI, the Kishin, the independent figure, falling to a new low since 2009 to 47 points. So that was negative for the Australian dollar. In other PMIs from the old continent, from Europe, the French economy looks better. Finally, French manufacturing is in growth territory, not in contraction. That helped euro-dollar stabilize, but only for a while. German figures were basically okay. And we have more echoes from the crisis in Volkswagen. The German car manufacturer basically cheated in the US on emissions. The share price fell. And this is important for FX because there is many suspect that other car manufacturers will suffer as well. So it pushes stock markets down and helps the doom and gloom atmosphere, pushing global stock markets down and helping the US dollar. So these are recent developments, and we're expecting an eventful day. We've already had some events with the fall of the Australian dollar. And moving to another commodity currency, we have retail sales in Canada at 12:30 GMT. The Canadian dollar looks weak, as we've shown before. Let's look again at the chart. It's closer, dollar CAD to 133. Another weak figure from Canada can maybe help it break higher, and a good figure will push it a bit lower. The market seems to want to sell the Canadian dollar. The big event of the day is Mario Draghi testifying in Europe. I think this is one of the reasons that euro-dollar is falling. Let's look at the chart. Markets I see euro-dollar is in range between 111 and 111.50, closer to the lower bound of the range. We might see it even fall further because we expect Draghi to be quite dovish. But please note that it might be already priced in. So if Draghi doesn't say anything earth-shattering, if he doesn't make a very, very clear statement about acting soon and perhaps enlarging the monthly bond buys, we might have a sort of buy the rumor, sell the fact reaction. So this is what I expect. If we have only ready to do more, but it might already be priced in. Watch the movements towards the event. So we have around 4 hours until the testimony begins. If we see euro-dollar falling a bit too much towards the event, we cannot rule out a bounce afterwards on a buy the rumor, sell the fact reaction. Later on, we have another speech from Dennis Lockhart. It might have less impact because it's the third time he's speaking this week. That's 4:30 GMT. And tomorrow, when the show begins, we have an important figure from Germany, the IFO Business Climate. That's the #1 think tank in Germany. And expectations there stand on a small fall in confidence, but as we know from the zoo figure, it can be even worse. But also here, there is a caveat. We have subcomponents of this figure. Future expectations could be weak, but the present could look good, and that could be the silver lining, serve as a balancing act. And let's have another reminder of the main themes in markets. These are echoes from the Fed decision. I think I've mentioned that. The ECB's next move, of course, that's Draghi's speech today. And China, we had figures from China now. And Chinese stock markets, talk about Chinese economy. Everything is going to accompany us for quite some time. So thank you. Here is my face back on the screen. I hope you learned something today. Everybody that had attended. I think maybe I didn't mention it before, but this is the second show and we're still in beta mode. We highly encourage participation from you guys. I think Brian got a very thorough answer about the Australian dollar, and I hope to help on any other market-related theme. We're still, any feedback is welcome, positive, negative, want me to focus more on charts, more on fundamentals, and of course, questions are welcome. So that's it for today. Have a successful trading sessions ahead, and I'll be here tomorrow. So as we say here in Spain, adios, hasta mañana, see you guys.